Well, thanks to everyone for attending today, and we really appreciate it. It looks like the rain held off this morning and the traffic wasn't too bad, and so we appreciate you taking the time. First off, let me just tell you, remind you again, this will be our last one for this year. We'll take a break for the holiday season and pick back up in the spring. This is also our 25th anniversary, so you'll see some additional stuff coming out from us here at the end of 2015 with that. We couldn't have made it for 25 years and grown and done the things that we've done in this marketplace without all of you folks, clients, friends, all of our employees. We were recently honored as one of the candidates for Business of the Year by the North Dallas Chamber. Came in the top 3, which I consider to be a pretty nice deal. And it was really an honor to get to do that. And one of the things I was telling our staff is we would absolutely never have gotten there without all the effort and time and hours that everybody has put in to making the firm successful. Today we're gonna, I was laughing telling somebody outside that we're gonna give you something else to stress you, okay? Everybody needs something else. The holiday season's coming, you don't have anything to think about, there's no presents, there's no events, there's no scheduling issues. So we thought that everybody needed their own to-do list. So one of the things you're gonna find in your packet today was we ran an actual copy of the presentation so that you could follow along. We specifically printed it so that it's white pages behind the first cover so you can write on it, take notes, that kind of stuff. We'll check with you in December, see how many of you completed, send you a grade. No, I'm just messing. But we did want to cover a lot of topics this morning, okay? So we're gonna be flying, like one of the jets coming out of Addison today when we're going through the topics. Please feel free to stick your hand up and ask questions, but we're gonna cover tax, we're gonna cover financial reporting, investments, retirement, all these different topics that we think people need to be thinking about. And a lot of this stuff is probably now till March, April, June. It's probably a good to-do list over the next 6 to 9 months of things that people should think about. So we're gonna kick it off. We also want to remind you there's a CPE evaluation form and stuff in there for you to fill out. If you would like the CPE credit, let us know. We'll make sure that all gets done. And there's also evaluation forms, in there for the speakers. And if you have suggestions for topics, we're very much open to those. We're looking at who we may bring in next year already for, say, February, March. But if you've got ideas and suggestions, let us know. There will also be handouts and videos of all of this available on the website. So if you do want to share that with someone, or if you'd like to actually cut and paste some of the video, let us know. You're more than welcome to use some of that. Our first speaker today will be Nancy Schultz. Nancy is head of our tax group and president of Chapman Hext. Nancy's been with us way too many years to talk about how long it is. We both started practicing when we were 10, and we were child prodigies, and so we were really young. But I always laugh and tell people, Nancy never uses a code section when she's talking to anyone about the tax law. So that way I can understand. She had to do it that way. But what you'll find is she speaks English in tax. And so that's what she's going to cover today, is going through and talking about some of the different things that are going on. It is all yours.
Oh, thank you.
Yep. She has her own. You have yours right there to use. Go ahead.
So it is the middle of November. It is really hard to believe that it's the middle of November already. So it is already past time to start doing our tax planning for the year. But that's when most of us do our tax planning for the year. We are in the middle of calling all of our clients and saying, what have you done for the year and what do we need to do before year end? So let's start that with you. They put me first, so hopefully I won't put you to sleep and they can still talk later. But because tax is so interesting, right? You just look forward to talking about taxes. So the new rate started in 2012. I'm sure that you all know about the new taxes because when you do your personal taxes, and you got it the first year, you went, oh my goodness. But there's a new tax margin, and the highest rate went to 39.6. And that happens, and thank goodness they at least put it for inflation. So the 39.6 rate in 2015 is now, if you're married filing jointly, at $464,000. So I know that impacts a lot of our clients, and it probably impacts a lot of your clients. So we have to really do a lot of tax planning for people to make sure that they stay either under that or figure out how to deal with it. The other number that we have to worry about is when itemized itemized deductions start to phase out, and that's $309,900 this year in 2015. And then the last number that we have to worry about is when the new investment tax comes into play, and that is not adjusted for inflation, and that's at $250,000. So those are three numbers that are not too far apart. So if any of you or any of the people, the owners that you're worried about or you are worried about fall into those three in that middle of that, then there's a lot of planning in that area. Then corporate rates haven't changed. So they're basically they're really at 34% unless you are in a small area, between 34 and 35%. If you're in AMT, and yes, AMT still does exist, then there's pretty much a flat number. And so if you're in that AMT and we have to plan for that, then sometimes it works for us to go ahead and accelerate income because you already know what that number has to be. So if we put income into your year, then it doesn't change that number. So it's really important to figure out what our AMT number is and then work around that. So sometimes we can accelerate income and not change our tax. So that's a real planning opportunity. If we have to be falling into AMT, then to work around that. That AMT is just a nasty thing. But usually we're worried about deferring income. But again, we have that opportunity if we're falling in between those three numbers to be deferring income, and especially between years. It's important to decide whether we want income in 1 year or the next year. So planning is really important, and we have one of our clients here that is exactly in that position, and we've worked a lot this year on figuring if we need to defer income or how we work with their employer to move it from 1 year to the next. Property taxes, that's one way we can, which year do you pay it? Do you pay property taxes or do you double your property taxes? And sometimes you get some benefit from doing that, and we've kind of listed those out. Charitable contributions, do you all know that you should not sell capital gains property before you donate it? If you have capital stock that's appreciated, you don't want to sell that. You want to just give it to the charity. And the reason is, if I have stock that's appreciated and I sell it, I have capital gains, right? I have to pay tax on that. Then I only have after gains tax or after gains cash to be able to give it to the charity. Well, we have a great loophole, and that is that if I give that stock to the charity, then I get to deduct the total value of it, but I don't have to pay the capital gains. So that is the one wonderful loophole that we do still have. Now keep in mind, we still have the phase out of itemized deductions, but if you're not in that, then that's a wonderful place to be. And then we also want to always, if we have capital gains that we have either in mutual funds or we've sold some capital gains, you want to look at your portfolio before year end And if you have some stock that you want to sell that has some losses, that's a good time to harvest those losses. Even if you think maybe in the first quarter you want to rebuy it. Now, you don't want to do it within 30 days, but if you want to go ahead and sell those, this is a good time to do it so you don't have the capital gains. And then you want to check your capital loss carry forwards and make sure that you've utilized those on your tax return. And believe it or not, Texas has an R&D credit. And you have a choice, so you need to work with your accountant and figure out if you want to pay and take the credit for your sales tax, or if you want to use the franchise tax credit. And it's a little complicated formula, but it is definitely worth using. And I will be back.
Yes.